In this video, I'll reveal my dividend income for the month of June. I'll also reveal any premium bond prizes I've won, and if you stay to the end, I'll discuss everything I've been buying and selling this month. My investment strategy is simple. I invest mainly in large cap dividend paying UK companies and I hold for the long term, reinvesting the dividends and allowing them to compound over time. I'm not interested in the constantly fluctuating share prices. It's the dividends which motivate me, especially when after a few years it starts to compound and feed on itself. But first, let's go back in time to June of 2009, the year it all started, when I received nothing at all. In the following June, I received £50 from Barclays, and in the June of 2011, I received £160 from Barclays, Persimmon and BP. In 2012, these same companies paid me £195. It was so motivating watching the dividends rise like this. I simply didn't worry about portfolio values or share prices. I just liked watching the average monthly dividends going up. I wondered at the time that if I continued this journey, where it would eventually take me, and if it could be possible one day for my passive income to exceed my wages from the day job. Now let's return to June 2023 to see where we are today. This video should not be considered investment advice. I'm simply showing you my own journey. Investments can fall as well as rise, and capital is at risk. On the 1st of June, it was the turn of BAE Systems to pay some dividends to their shareholders. The shares are up 8.5% this year. The yield is 2.9% spread over 2 payments a year. As you can see from the graph, the company has a great track record of growing its dividends year after year. This month, BAE Systems paid out a total of £190. If you want to know how much I hold in each company, then I've listed the totals in the video description. On the 12th of June, I received a present from Bluefield Solar Income Fund. The company basically turns sunlight into money. The price is down nearly 13% this year and the dividend yield is 7.1% spread over 4 payments. Dividend growth remains fairly stable over the last few years, and this month Bluefield Solar paid out £60. On the 15th, it was the turn of Unilever to reward its shareholders. The shares have fallen slightly this year and the yield is 3.6% spread over 4 payments a year. Unilever has a good track record of growing its dividends, and this month I received a total of £300. On the 23rd of June, I received some cash from BP. The shares are down 5.6% and they pay a reasonable dividend of 4.6%. BP is another company which pays 4 times a year. Dividend growth has been a bit patchy over the years, as oil is a cyclical sector. This month I received a total payout of £305. Before I continue, if you are thinking about starting your own dividend journey, then why not check out Trading 212, which is a really cost-effective platform to buy and sell shares. And if you sign up using the link in the video description, then we could both get a free share worth up to £100. Also on the 23rd, I received dividends from Tesco. The shares are up 8.5% this year and the yield is 4.4%. Tesco have had their fair share of problems over the years and this is reflected in their dividend history, but in recent years they seem to be back on track. This month I received a total of £235. Again on the 23rd, I received some cash from HSBC. The shares are doing well this year, up 14%, and the dividend yield is pretty good also at 5.5% spread over 4 payments a year. The dividend history is a bit patchy as banking does tend to be a fairly cyclical sector. This month HSBC paid out £140. On the 26th, it was the turn of Shell to reward their shareholders. The shares are down a touch this year, but the yield is a healthy 4.5% spread over 4 payments a year. Not a lot to see regarding dividend history here, but Shell has been paying dividends for many decades. The missing data here is simply because in 2021, the company scrapped its dual share structure and changed its name to Shell from the original Royal Dutch Shell. This month, Shell paid out a total of £300. On the 28th of June, all of my 3 exchange-traded funds paid out dividends. The first is a FTSE 100 ETF and has the ticker code ISF. It gives you exposure to the complete FTSE 100 all in one share. It's down slightly this year. The yield is 4.1% spread over 4 payments. This screen shows some of the biggest holdings you would have. It's weighted by capitalisation, so you would have over 8% exposure to AstraZeneca, the largest listed company in the UK. The ongoing charges are only 0.07%, which makes this a very cost-effective way of owning UK large caps. Dividend growth can vary a bit from year to year. Now, the number of notes here are not quite correct, and the actual amount I received was £275. Next is an S&P 500 ETF, and this gives you exposure to all those big American giants. Here are some of the largest ones. You would have a 7.5% exposure to Apple. Ongoing charges are tiny, so this is a very cost-effective way of owning 500 of the largest US listed companies. The ticker code is IUSA and the price is up 7.5% this year. It pays a relatively low dividend spread over 4 payments. This month, IUSA paid out a total of £60. If you find these videos useful, then please hit that like button as it really helps out the channel. Thanks. My final ETF is VHYL. It's down 5% this year, but it pays a decent dividend of 4.1%. The aim of this ETF is to give you exposure to nearly 2,000 large and mid-cap companies across the world, which pay decent dividends. The ongoing charge is 0.29%. This month, VHYL paid out a total of £80. On the 30th, I received some dividends from the Renewables Infrastructure Group. This company specialises in renewable energy. The shares are down nearly 15% this year, but the yield is very respectable at over 6%. The company has a good track record of dividend growth. This month I received a total of £45. Also on the 30th, it was the turn of Imperial Brands to pay out some cash. The shares are down around 15% this year, but the yield is high at 8%, and there are 4 payments a year. Dividend growth has been impressive over the years, but the last 3 years have been rather flat. This month, Imperial Brands paid out a total of £100. And now for premium bonds. The prize rate for the July draw is being increased to 3.7%, and the August draw is increasing again to 4%. There is 1 draw a month. You have easy access to your money, and there is a chance to win £1 million each month. All winnings are tax-free. This month I managed to win prizes totaling £125. The bar on the left shows how much I would expect to win so far this year with average luck, and the bar on the right shows what I've actually won in the first 6 months of the year. I'm ahead of the game at the moment, and it will be interesting to see how this develops in the second half of the year. But how do premium bonds compare to keeping money in a savings account? Well, it's worth remembering that money in a regular savings account could be liable for tax. Here is an example based on a higher rate taxpayer. If you have £50,000 in premium bonds, then from this August the prize rate will be 4%. This will give you an expected yearly return of £2,000 in prizes, and it's all tax-free. Now let's see what happens if you had £50,000 in a savings account at an interest rate of 6%. This would return £3,000. However, tax of 40% would be liable on anything over £500, and this would leave you with £2,000 after tax. So the conclusion to all this is that from August you would need to find an interest rate greater than 6% to beat the expected net return from premium bonds. There is also the fun and entertainment value of premium bonds, which should not be underestimated. I use premium bonds as my emergency fund so I can allow my shares to compound over time. Now for my passive income totals for the month. The green bars on this graph show my passive income for the first 6 months of last year, and the blue bars are for this year. The total for this month was £2,215. This graph shows how my average monthly dividend income from shares alone has changed since I started my journey in 2009. You can see the effect of the pandemic in 2020, but also how quickly the dividends recovered. At the time of this video, I'm receiving an average of £1,207 a month, and every penny is tax-free as I make good use of a stocks and shares ISA. In just a moment, I'll reveal everything I've been buying and selling this month, but first a quick look at the FTSE 100 ex-dividend dates for the month ahead. Only a handful of companies go ex-div in July. If you own the shares before this date, then you are entitled to the dividend, which will be paid to you on the payment date. As an example, I own shares in SSE, which goes ex-div on the 27th of July. I will be entitled to 67.7 pence for every share held, and this will be paid to me on the 21st of September. This screen shows all the payment dates, and I'll be expecting payments from Scottish Mortgage Investment Trust and GSK. And now for the highest yields, with Vodafone leading the way at 10.6%. With very high yields, there is always a risk of a dividend cut, something which happened to Rio Tinto earlier in the year. The average yield of the FTSE 100 is 3.8%. So what have I been buying this month? Well, I've bought more Croda when the share price fell sharply. I've added more to Rolls-Royce as it still seems to be moving with momentum. I've purchased more shares in Diageo to capitalise on lower prices. I've added more to my S&P 500 ETF as it now seems to have a bit of momentum behind it. I've added to Greencoat Wind Energy as they seem to be going cheap at the moment. And finally VHYL for more of those global diversified dividends. And now for the sales, just one, and I've sold my entire stake in Scottish Mortgage Investment Trust. Most of the proceeds from this have gone into my S&P 500 ETF, and I just feel that over the very long term, this is probably a better strategy. Now, how do you own every sector in the market with just 11 shares and get paid every single month? To find out, click this video here.